we're looking at big shifts reshaping global finance, from London's crypto ambitions to China's latest trade push, oil market turbulence, and a Gulf fintech on the rise. Welcome to Finance Pulse, and here are the top headlines of the day. We start in London, where a homegrown crypto pioneer is making a bold move onto one of the world's biggest financial stages. British cryptocurrency investment firm KR1 has announced plans to list its shares on the main market of the London Stock Exchange, a significant step up from its current listing on the smaller Aquis exchange. The move is designed to attract a wider base of institutional investors and boost transparency. KR1's decision comes at a time when digital assets are increasingly being recognized as part of mainstream finance. As blockchain technology becomes woven into payment systems, trade networks, and even central bank policies, the company's uplisting signals growing confidence that crypto is moving out of the margins and into the heart of global markets. Meanwhile, in Asia, China is positioning itself as the antidote to protectionism. In a high-profile meeting in Vientiane, Chinese Premier Li Qiang signed an expanded free trade agreement with ASEAN, deepening ties with the 10-nation bloc that represents more than 600 million people. Li framed the deal as a counterweight to what he called the closed-door trade approach of the United States under President Donald Trump, who has reintroduced a series of tariffs and restrictions in recent months. For Beijing, this agreement isn't just about boosting exports, it's about influence. By pledging easier market access and faster customs processes, China is making a strategic pitch to Southeast Asian economies that are increasingly caught between two global powers. The message is clear: while Washington talks tariffs, Beijing is offering trade. From global politics to the global energy market, oil prices are once again on the move, this time heading slightly downward. Brent crude slipped to around $65.58 a barrel, while US West Texas Intermediate fell to $61.22. That decline comes after OPEC signaled plans to boost production, adding pressure to prices that had already cooled earlier the week. At the same time, investors are watching for a breakthrough in the ongoing US-China trade discussions, which have brought a touch of optimism to global markets. But for now, OPEC's output strategy appears to be outweighing the trade hopes, at least when it comes to the oil charts. Energy analysts say the short-term softness in prices could give way to renewed volatility later this quarter, as supply-demand balance shifts and geopolitical tensions simmer in key producing regions. And finally, to the Gulf, where one of the region's fastest-growing fintechs has just hit a new milestone. Tabby, the Saudi-headquartered buy now pay later platform, has completed a major secondary share sale, valuing the company at an impressive $4.5 billion. The deal saw existing investors sell shares to a mix of global funds, including SHG and Boyu Capital, positioning Tabby among the most valuable startups in the Middle East. The valuation comes as the company eyes a potential public listing and continues its rapid expansion across Saudi Arabia, the UAE, and beyond. It's another sign that Gulf fintech is no longer just catching up, it's leading innovation in how people pay, shop, and manage credit. That's all in Finance Pulse for today. Follow the Finance 360 for more.